Bitcoin is right now pushing to the upside. We're gonna discuss this as always, of course, discuss also the news, discuss what Bitcoin is doing right now. We have a rising wedge, very importantly, and a very important chart which I have not shown you guys so far, which is this, which is showing us the production cost of Bitcoin and how it always coincides with the bottom of the bear market. It's a very interesting indicator. Without further ado, let's get started. So first of all, our favorite president, well, Trump, of course, has posted and on Truth Social said that he's totally unacceptable with the newest proposal of Iran. He's just going back and forth. This guy is crazy. He's one day he says this, one day he says this. But what matters is that whatever he says is moving the markets, right? And as a result, there was, I think, like 15, 17 hours ago, Bitcoin has dumped a bit, which has, of course, afterwards again gone up. So Bitcoin is very volatile. We've seen it go down, we've seen it go up, and right now it's at around about $82,000. You know what I think will happen next? I think we're gonna go to 84,000 and then potentially go down from there. But before that, let's look. It's Monday. Let's look at what this week has to offer. So today, in April existing home sales data will come out. It has actually come out already, and here we have the summary for you guys. So the key results is that we have the April 26 results data was released today, and basically $4.02 million of home sales data, 0.2% month over month increase. So that's basically no increase almost. So we're flat year over year as well, and slightly below economist expectations. So basically the median home sales price in the US right now is $417,000, which is the highest for any April on record. However, keep in mind we have inflation. So essentially what the data is showing us is that home sales data is stagnating. We have high mortgage rates, high interest rates, and people are deferring the purchase of real estate, of course. Also, we're gonna get tomorrow CPI inflation data. This is probably the most important news event that's coming out about the inflation rate. We know that last month we had 3.3% inflation month over month, and now we have tomorrow then coming out the new data. Let's see. Personally, my expectation is that we're gonna remain high with, of course, the war continuing and with oil prices remaining high. The day after, on Wednesday, we have the PPI inflation data coming out, which is the production inflation data, which is a leading indicator. So it's telling us what the production costs are for manufacturers, and if these are higher, then eventually also the goods and services costs will be higher. So it's a leading indicator, meaning that it will tell us what will ideally, potentially inflation will be in the future. It's a very interesting indicator. Then we have the OPEC monthly report coming out on oil and crude oil demand and supply. Of course, we know that right now there is very high oil prices, supply, we have cuts in supply. And then on Thursday, we have retail sales data coming out. So it's telling us how much are people actually buying and what is their willingness to pay. And then on Friday, industrial production data is coming out. So a lot of inflation related data is ahead of us, which is what I'm trying to tell you guys. Let's see what happens tomorrow if interest rates are, so if inflation, how inflation does. And then of course, based on that, interest rate decisions are being made. We know that inflation is high, most likely it will remain high, which means that interest rates will also remain high and will not be dropped. Because if interest rates are dropped, then this will just cause further inflation. Okay, let's go straight into Bitcoin. Bitcoin right now had a major support line here, which has previously acted as resistance again, and now acts as support. And I strongly think it's a strong line of support, which we are going up from. And what are we trading in right now? Where we have this pattern, which is a rising wedge pattern. And the rising wedge pattern is downward, is a bearish pattern. So essentially we have this wedge, and when we converge, we have less volatility. We converge towards the end, and you can see right now there's not many days left. So I've seen a few YouTubers say we have 48 hours left. Well, who knows? It might be more, might be less, but essentially this chart can break out any moment now. I personally think we'll go to $84,000 within any time this week and then break towards the downside. How do we measure the target of this rising wedge? Well, it's the bottom of the wedge, which is here, which is approximately $65,000. So for me personally, if we reach $84,000, which is of course the CME gap, let me show it to you guys here again. We have a CME gap at $84,000, which is acting as a target. Eventually then, once we fill that, I think the bottom target then is $65,000. While I'm on this chart, I want to show you guys that over the last weekend we formed a new CME gap. I mentioned this on the video yesterday that we will potentially form a new gap if Bitcoin pushes up over the weekend, and we can see we have a small gap here all the way at $80,400. So potentially this will either be filled now in the coming days if we go down a bit and then up, or we'll go to 84 and then of course we'll fill it on the way down. Keep in mind also we have two more CME gaps still open from a couple of weeks ago, which is all the way here at $69,500, and another one below that at $67,100, which I also think will get filled over the coming weeks, of course. Okay, the next thing we're gonna have to talk about is that always historically Bitcoin dumps 749 days after each halving, and this has happened also the last few times. In 2014 this led to a 65% correction, 2018 64% correction, and in 2022 a 52% correction. And we know that what can we see here is that the corrections are less and less every time as Bitcoin has more adoption and becomes more mature of an asset. Of course, the volatility is less and Bitcoin does not drop 10% in a day, hopefully, as it did when it first launched and Bitcoin was very small asset class. And I just want to show this to you guys here also. So we have the halving events which happen every 4 years when we have a certain number of Bitcoin blocks being mined by the miners. And this chart is, I would not rely on it completely, it's just a nice thing to look at, but essentially approximately 750 days after we see a dump. You can see here there was a small dump, 750 days. After the cycle after that, not exactly 750 days, it was actually a bit longer. Let me just see how many days it was. It took actually about 850 days, but the cycle after that, yes, we had a dump after 750 days, and right now we are exactly just passing 750 days, and that's why I'm showing this to you guys, okay? Because we have a pattern here which is repeating. We just passed 750 days. We can see previously we're trading sideways before we crash, so it doesn't necessarily mean that we're gonna crash now immediately, but essentially usually after 750 days we have one more final correction, which is then the last dump before we find the bottom in the bear market. Like I said, $84,000, and then we go potentially down. Let's look at the liquidity very quickly because I mention it every time. What I'm trying to tell you guys is we have a lot more long liquidity than short liquidity. So there's a lot more liquidations in the long side, meaning all these people are long, okay? And if Bitcoin goes all the way to $71,000 here, $6.59 billion of long positions will be liquidated, compared to only $1.4 billion of short positions, which is if Bitcoin goes to $90,000. So a lot more people are long. Usually Bitcoin follows the price where most people get liquidated. Looking here at the liquidation heat map also very quickly, we can see there's more liquidity building up now at around $83,000, and we have at $82,000 right now, so very close to that price, expected to be hit in the coming week. And then we have some, not as much, but we have some liquidity here all the way up to $85,000. So like I said, we go to 84, then we go down, and every day more and more liquidity is building up towards the downside. Of course, these are people that are longing the market right now as Bitcoin goes up. As Bitcoin goes up, many people are also saying, and I'm seeing this online, that we are at the bottom. This was the bottom of the bear market. What did we have? $67,000, I think. What did we have at the bottom? Like $63,000, which is a very low price, to be honest. But people are saying that was the bottom. That's it for Bitcoin. But I can tell you guys, historically, Bitcoin always takes 12 months to hit the bottom. I just want to show this to you guys here again. From the top to the bottom, usually it takes 365 days. Here it's 365 days, 365 days. If the same thing happens again, October of 2026 will be the bottom. And that's the main reason I believe that we are not yet there at the bottom, because personally, I really like to look at history. History has shown us for the last 3 times that it was always the case that we went down for at least 12 months. And as long as nothing changes, I still want to believe in history, because there's no reason to deviate from the plan. Just because we go up now, let's stick to the plan, okay? And what did I circle here for you guys? I want to highlight that every single bear market, we had no more than 2 consecutive green bullish candles. You see, we had 2 consecutive candles, but never 3, right? Also, the cycle we actually only had 1 green candle in a row, not 2. And then last cycle, we had also 2 consecutive candles before one final push to the downside. Why am I showing this to you guys again? Because it's relevant, because right now we're forming a third green consecutive candle for May, of course. Also May, usually people say sell in May and go away, because May is usually a bearish month for the stock market also. And we know the S&P 500 is massively overinflated. I wouldn't be surprised if it goes down a bit, but I also would not be surprised if it continue to rally up, especially with all of the AI and technology boom that we're seeing right now. So things are a bit different, but personally, I would expect May to be negative. If not, I'd be really surprised, to be honest. So we talked about the liquidity. Now I want to quickly talk about this chart. So we have two lines on here. Let's focus on the orange line first. Sorry, the orange line is the 200 daily moving average. So it's the average price over the last 200 trading days. And we can see that whenever we get close to this line in a bear market, it acts as a resistance. So we go down from here. Right now, we are exactly at this line. Previously in a bear market, we were touching the line and acted as resistance. We went further down. Also here, we touched it. We went one further down. The moment we broke above this line, and this is a very important line, the moment we break above the 200 simple daily moving average line, we are basically in a bull market, lights out, we go back up, okay? And then if you go back here, the same thing happened also there. You can see got rejected here. And then the moment we broke above it here, guys, we went into a bull market, and then usually we stay above that line. Now let's go into the blue line. What is this line? Well, it's the average price over the last 200 weeks. So it's on a much larger scale, and therefore, of course, it is lower. It does not have as much fluctuations. It's a more bigger average price. Okay, we can see here if it's just the last 200 days, then it is of course much closer to the current price. If it's the last 200 weeks, it's a much smoother average. And why am I showing this line to you guys? Well, because this is a good indicator where we have the bottom of the bear market. In order for us to be at the bottom, usually we go below this line. And right now you can see we did not go below this line, and that's also why I think we're not at the bottom of the bear market yet. Let's go again. We always like to go back in time and see what happened last time. Last cycle we clearly went below this 200 average 200 weekly moving average for the last 200 weeks, and also the time before that we literally touched the line perfectly before going up and finding the bottom of the bear market. And that's it really. So for right now, we can clearly see we did not touch this line yet. And I think we're going to go down, touch the line. So where is the line? Where is the bottom? We know that the bottom will happen about 365 days, right, after the halving. But we want to know the price also. And I personally think around 50,000. And we can see here the price is around about 60,000. So let's see what happens. Last time we went further down than the line. We don't have to exactly touch the line, but I'm still thinking bottom will be approximately $48,000 to $55,000 in that region. And why do I think that? Well, because it aligns here perfectly. If I draw, one sec guys, if I draw this line, you see it's here. It has acted as resistance, it acted as support, and where's this line? It's around $51,000, $52,000, right? So the next thing I want to talk about is this very important chart. So I just came across it today. I'm learning every day. I'm trying to teach you guys every day, and we're improving our crypto knowledge every day together. So what is this chart showing us? It is the production cost of Bitcoin. So of course, Bitcoin is being mined by miners with computers, and the cost to mine Bitcoin increases over time. Electricity costs are going up. It's getting complicated to mine these Bitcoins as there's more competition, more people are mining Bitcoin. And over time, of course, the cost to mine Bitcoin is going up. And also the reward for Bitcoin is going up. Every 4 years, the reward you get for mining one block of Bitcoin is halved. I believe right now it's around 3 Bitcoins per block or something, or 1.25 Bitcoins per block. I have to look that up again. But we can see that every time this is a super good bottom of the bear market indicator. This is not used for daily trading. This is used on a weekly or monthly scale, whereby we really zoom out and we see, are we at the bottom of the bear market? And usually we really touch this bottom line. We don't just go into the shaded area. We can see we touch the bottom, and look at this. If you buy when we touch this line, you're almost guaranteed to buy at the bear market bottoms. And why is that? Because if the price of Bitcoin goes below the cost to mine Bitcoin, then it does not make sense for any miners to mine Bitcoin. And this acts as a natural barrier for Bitcoin to move up from, as of course people buy at this price. Otherwise Bitcoin would be so cheap that it would not make sense to mine it anymore. and then for Bitcoin will go up in price. So we can see here also, the moment we dip below, we went up. Here also we dip below, we went up. And last cycle also, we literally touched the line. And now it's very important what I want to show you guys. Look, we touched the line, the darker purple line. We didn't just go in the gray area. Why is that important? Because right now, we actually went into the gray area, but we didn't touch the line. I mean, we touched the line here in the candle wick, but on the main candle, we didn't touch the line. Look at the last time. Yes, we touched the line with the main candles and we traded a bit sideways. We didn't just touch them with the wicks itself. And that's another reason why I think we have a chance to go further down, touch this line. And this is right now at $57,000. We can see it's downward sloping, so it's going down. The production costs are going down a bit. I still think if you buy Bitcoin in October at approximately $55,000, you don't want to really hit the bottom because it's difficult. Don't wait too long, because once Bitcoin goes up, it will go up fast. But just another indicator for you guys to see that Bitcoin does go down. And right now here we can see the production cost indicator estimates the average expense, primarily electricity, hardware, and operation costs required to mine one Bitcoin. It acts as a long-term valuation tool, often considered a floor price, because if the market price drops below the production cost, miners face losses and may shut down, reducing supply. And we know that if supply is being reduced, then of course price goes up, like with any good in the market. And that's it. I showed you guys the CME gaps already. We know what's happening next. I hope you guys stay informed as always. Do the right decisions. Don't use your emotions when trading. Just stick to the charts. Stick what we can see clearly. And your emotions, you cannot see them, but the charts, you can see them. So let's follow the charts, please. Thank you guys as always for watching. See you tomorrow. Bye.